Hi, everybody. This is Taiwo Akwa, founder of Minty. It's the 8th month 2021, and I hope you're doing great. So, today I am going to be talking to you about commodities investing. The theme this year from Faminti has been about investing. The reason why you need to invest, the reason you need to put your money to work. So, today I'm going to be talking about what are commodities and why you should consider putting commodities in your portfolio of investment. So, what are commodities? Commodities are generally seen as alternative to the traditional stocks and bonds that investors typically talk about or the information you hear in the stock market. So, commodities essentially are products or assets that are used to produce other assets over time. So, I give you an example. A commodities can be, cashew nuts. It can be crude oil. It can be gold. It can be silver. It can be cobalt. It could be anything that is used to produce your other products. So why is it important for you as an investor to consider commodities in your portfolio? Number one is they're actually very good hedge against inflation. We all know what's happening with inflation in countries like Nigeria at the moment. Inflation is about 20%. So what commodities does is that the price of commodities tend to rise when inflation rises. So essentially, it balances out. So it's a hedge for you. A good example is if you invest in gold. Gold is typically seen as inflation hedge. When gold prices are rising, it's typically a hedge against inflation. A lot of people also do not know that as an investor, how you can go about getting exposure to commodities. It seems really far-fetched, right? But the fact is it's not that complicated. One way you can get exposure to commodities is investing in stocks and shares of commodity producers. For example, ExxonMobil. We all know ExxonMobil as one of the largest oil producers in the world. We know Chevron. We know Total, which is very close to home in Nigeria. We know Eni, from another oil producer. So what you can do as an investor is invest in the stocks or shares of those companies, i.e., you get exposure. That's what you call indirect exposure to commodities. Another way you can invest in commodities is through direct exposure, meaning buying, the gold assets directly themselves, and also you trying to get exposure to crude, right? That's a little bit complicated for new investors, and I would say you should stay away from that because you need a lot of money, a lot of capital to invest in buying, gold assets. There's also issue about storage, and then also the crude oil as well. The point I'm trying to make is it's not very easy for a new investor to get direct access to commodities. So my advice would be for you to go through the indirect route, buying the shares, the stocks and bonds of these commodity producers. You can look at a number of indexes, stock market indexes to look at the key companies that are doing very well for commodity players, gold producers. You have the likes of Glencore, who are really world class commodity producers. They have exposure to a range of commodities. So that's one way for you to get exposure. I hope this video has been very useful in educating you about what commodities are, how to get exposure to commodities, the benefits of commodities, particularly being an inflation hedge. And do check out my website, www.fammenti.com, for a range of information about investing. You really cannot afford not to invest as a young woman, as a man, because that's the ultimate way for you to build long-term sustainable wealth. So I look forward to sharing more videos and catching you next time. Take care and thanks for listening.